Friends, today we see the meaning of income, and I am extremely sorry for the disturbances caused because of the Zoom app. Regarding the meaning of income, Section 2, subsection 24 of the Income Tax Act 1961 explains something about the income, but there is no definition regarding income in the Income Tax Act. They have not given a clear definition regarding the income in the Income Tax Act. Simply, we refer income means monetary returns. Whatever monetary returns an assessor receives, that all monetary returns are termed as income. We consider all that as income. It includes the value, benefit, and perquisite. Whatever benefits you receive or the perquisite in lieu of salary, all those comes under the income. Whatever you receive in form of money, that is called as income in general. Okay. So the definition given under section 2 subsection 24 includes is inclusive and not exhaustive. Whatever definition explained there, that is inclusive, means whatever we include in the term income. It is not a exhaustive definition or meaning of the income. And according to English dictionary, the term income means periodical monetary return. According to English dictionary, we are going to see that income means periodical monetary returns. Whatever periodically monetary returns we receive in regular form from different sources. We receive periodically, regularly from a different sources like business, land, work, investment of money with others. Whatever we receive periodically, regularly, definitely, all those monetary values are called as income according to English dictionary. It is not according to Income Tax Act. Okay. And the term income includes not only what is received. Remember this point. Income includes not only what is received by using the property. By use of property, whatever you receive, that is your income. That is the first one. But it also the amount saved by you people by using it himself. Whatever you receive by way of using the property, that is also income. Along with that, the amount saved by you by using itself, that is also called as income. You use the property or without using the property, you keep money somewhere and take income. Okay. Anything which is convertible into income, anything which is convertible into income can be regarded as source of accrual of income. Source of accrual of income. From which source you receive, that is the not a main point, but whatever income you receive, that is important. So according to income tax, the term income includes profit and gains. Whatever profit and gains you receive from the business or professions or any other services. Profit or gain received by the businessman is taxable as income. Then dividend, the dividend received by you people by investing your amount in the corporate sector, the dividend is taxable. Dividend received from Indian company is exempted, but that that is taxable, and dividend received from foreign company or dividend from cooperative societies. So whatever dividend you receive, that is also taxable. Next is voluntary contribution received by the trust. Whatever voluntary contribution received by the trust, it may be temple, gurudwara, any other form of trusts. Voluntary contribution received by the trust is called as income. Okay. These are some examples of income. Simply you remember what is income means. Whatever amount received or receivable by a person, and that is considered in the income tax act as a income, on which income tax department calculate the tax, that is income in general. So tax treatment of income. We consider income which is related with the tax. Tax treatment of income. For the purpose of treatment of income for the tax purpose, it can be divided into three categories. For the purpose of income tax purpose, we divide the income into three categories. The first is taxable income. What is taxable income? These incomes form part of total income and are fully taxable. These are the incomes which are taxable by the income tax department. Taxable income means these are the incomes taxable by the income tax department fully, and these are treated under section 14 to 69 of the Income Tax Act. The taxable incomes are explained under section 14 to 69 of the Income Tax Act. These are salary, rent, business profit, professional gains, capital gains, interest, dividend, winning from lottery, races, casual incomes. Section 14 to section 69 of the Income Tax Act explains the taxable incomes. Okay, this is the first part of income. And the second part of income is exempted incomes. Just a minute, my battery is going low. I'll take the other place. Okay. The income is divided into three categories. First category of income is the taxable income. Taxable income is explained under section 14 to section 69. This term includes income from salary, income from house property, income from business or profession, and income from capital gains, and income from other source. Okay, these are the 5 items we cover in the taxable income. Next, second income is exempt. Second category of income is exempted income. Exempted income means these are incomes which are exempted from the income tax department. Means these are the incomes received by the assessee, but the income tax department will not levy tax on these incomes. Okay. The first category incomes are the incomes taxable by the income tax department, and second category incomes are the incomes which are not taxable by the income tax department. These are the incomes received by the assessee, and these are fully exempted from the tax or partially exempted from the tax. The incomes does not form the part of total income, either fully or partially. Means these are the incomes. These incomes are fully exempted from the tax, or in some cases partially exempted from the tax. These incomes are these in, these incomes are explained under section 10, subsection 1 to subsection 32. Subsection 1 to subsection 32 of the Income Tax Act, they explains incomes which are exempted from the tax and incomes fully exempted and partially exempted from the tax. All those incomes are explained under section 10 subsection 1 to 10 subsection 32. It may be related to agriculture income. It may be related to income received from the partnership firm. It may be income received from Hindu undivided family. It may be income received from government and so on. There are so many incomes we will discuss in the coming days. The first part of income is taxable income. Second part of income is exempted income. Taxable incomes are explained from section 14 to section 69. Exempted incomes are explained in section 10 subsection 1 to subsection 10 subsection 32 of the Income Tax Act. This is the second category. And third category incomes are rebatable incomes or tax-free incomes. Rebatable incomes or tax-free income. These incomes are from the part of the total income and are fully taxable. Tax is calculated on the total income, out of which a rebate of the tax at a average rate is allowable. These are the incomes considered for the calculation of tax. And after calculation of the tax, income tax gives discount or rebate on those incomes. The income tax department gives the rebate. Rebate means discount. discount on those incomes. This is the third category income. First category income is fully taxable. Second category income is free from tax, that will not be taken for calculation, that is exempted. And third category income is also free, but we consider in the calculation of income tax. Afterwards, we give rebate on those incomes. We give rebate on those incomes if the assessor is having the rebatable incomes. Okay. While calculating rate of tax or while calculating the amount payable of tax. These are the three categories of income: taxable income, exempted income, then rebatable income. The three categories, and you remember these three for your future reference. Next is, what is gross total income? What is gross total income? Gross total income is the total of taxable income. Gross total income is the total of taxable income. Means you have to calculate income of a person based on income received from salary, income received from house property, income received from business or profession, income received from capital gains, and income received from other source. So there are 5 heads of income. First head is salary. Second head is house property. Third head is business or profession. Fourth head is capital gain. Fifth head is other source. Okay. The aggregate of these 5 heads income is called as gross total income. Aggregate of 5 heads. 5 heads are salary, house property, capital gains, business or profession, other source. The aggregate of these 5 heads income is called as gross total income. Remember this one. And these 5 heads are the 5 units for your study. Gross total income means it is the aggregate of 5 heads of income under section 14. Then after this, the total income. What is total income? Gross total income, total income. Total income means it is the aggregate of 5 heads income from the gross total income. From the gross total income, we deduct the deductions under section 80. The income tax department gives certain deductions if you are having certain specified incomes and expenses. If you are having certain specified incomes and expenses, the income tax department gives the deduction, means permit to deduct those income or expense from the gross total income. Remember this point. What I am telling, the income tax department permits you people to deduct the specified incomes and specified expenses. Specified incomes and specified expenses. Suppose you are having those incomes and expenses. You are permitted to deduct from the gross total income. After deducting the deductions explained under section 80 of the Income Tax Act, whatever balance remains, that balance is called as taxable income. Balance is called as taxable income. Regarding gross total income and total income, I would like to explain once again. First, you calculate income from salary. First, you calculate income from salary, first head. Secondly, you calculate income from house property, income received from house property. Third, you calculate income from business or profession. Fourthly, you calculate income from capital gains. Fifth, you calculate income from other sources. The total of this is called as gross total income. From this total, you deduct the deductions explained under section 80. You deduct the deductions explained under section 80. Whatever balance remains, that balance is called as taxable income or total income. That is called as total income. Clear? Total income. Total income. Gross total income, total income. This is regarding income. Remember this. Today, I explained what is income, what are the categories of income, how the income tax department classified the income, then what is gross total income, what is total income. Regarding the income, you remember only 5 points. Whatever already I explained, you forget all those things and remember only 5 points. One is what is taxable income, what is exempted income, what is rebatable income, these three. Then you remember gross total income, total income. These 5 points are important in this aspect. Okay. And next is what is assessment year? What is assessment year? According to section 2 subsection 9 of the Income Tax Act 1961, they explains assessment year is a period of 12 months. They explain assessment year means it is a period of 12 months. The period of 12 months commencing from the first day of April every year. This 12 months period commences from 1st April every year and ends on 31st March of next year. It ends on 31st March of next year. It is also known as financial year of the government. It is the financial year of the government commencing from the 1st April and ends on the 31st March of the next year. And this is the financial year of the government, and this year is called as income tax year. Income tax year. And in this year, the income tax department start the proceedings on the assessee regarding the income of assessee related with the previous year. Related with the previous year. What is assessment year? In general, I would like to say assessment year is the year in which income tax department start the proceedings. Income tax department start the process of calculating the total income of the assessee, total tax liability of the assessee, and the penalties, etc. In which year income tax department start the process of calculation of income, taxable income, then amount of tax. That period is called as assessment year in general, not as a technical term. Then according to technical meaning of income tax department, assessment year means it is a period of 12 months. It is a period of 12 months commencing from 1st April every year and ends on 31st of the next year. In this year, income tax department start the proceedings in connection with assesses income and tax liability relating to the previous year. Relating to the previous year. And this year is the financial year of the government. This year is the financial year of the government. And this year is also called as income tax year. Income tax year. This question may come for 2 marks. You remember this. What is assessment year? Okay. Assessment year. And I say that assessment year is a year in which income tax department start the process of calculation of income and tax liability pertaining to previous year. Then the new word is here, previous year. What is previous year? Okay. I given the example regarding the assessment year. Assessment year is the financial year of the government of India during which the income of a person relating to the relevant previous year is assessed to tax. For the current year, for the current assessment year is 2020-21. Assessment year, this is the assessment year. Current assessment year is 2020-21. This year started on 1st April 2020 and this year will end on 31st March 2021. This is the assessment year. Then in this year, we calculate the income and tax of the previous year. What is previous year? What is previous year? We will see the previous year. What is previous year? According to section 3 of the Act, according to section 3 of the Act, it is a financial year. It is also financial year. Financial year starts on 1st April and ends on 31st March of the next year. It is also a financial year ending on 31st March every year, immediately preceding to assessment year. Remember this point very carefully. This is the financial year ending on 31st March. This is the year ending on 31st March. Immediately preceding the previous years, immediately preceding the assessment year. Means on which day you start the assessment year, before that, whatever period is there, that period is called as previous year. So, previous year is the financial year of the government ending on 31st March every year, immediately preceding the assessment year. Preceding means back. Previous. Okay. So for the assessment year 2020-21, for the assessment year 2021, previous year should be the financial year ending on 31st March 2020. Ending on 31st March 20. It may be start from 1st April to 1st April 1990 to 31st March 2020, or it may start at any time. Okay. So time is going out. So there is no time. Only 1 minute time is there to me. Today I am not happy with the class because there are so many interruptions, and whatever I explained, I will upload it by evening. And regarding this income tax, there are some disturbances I faced. So I'm not happy with this class.